Bitcoin doesn't need the United States. The United States needs Bitcoin because our dollar has not been treated well by policymakers, and Bitcoin is a hedge against that.
Brian, welcome to Austin Next.
Thanks for having me. Great to be with you.
All right, we're going to start off like really philosophical here. Is Bitcoin store of wealth, medium of exchange, technology, all of the above, something else entirely? How would you describe it?
A way of life.
A way of life. All right, we're already going that direction. I see. Yeah.
It's all of the above, honestly. It has, I think, exceeded a lot of people's expectations as a store of wealth due to its scarcity. And with now institutional adoption and nation state adoption in the offing, I think it has become a modern precious metal functionally. It is still, there are trillions of dollars of transactions on the network. So it is a medium of exchange. And of course, this is technology. It is, I think the best description I've heard, I'd love to claim credit for this. I can't, others have used it, but it's sort of doing for money what the internet did for information, which is to say that it's democratizing it. It's making it global and instantaneous. And I think, again, due to its scarcity, gives it a very healthy contrast with fiat currencies that can be printed ad infinitum. So it's a very interesting new thing that a lot of people are embracing because of the ease of use and dissatisfaction with the legacy financial institution. They feel like maybe it hasn't been serving them too well, so they're looking for alternatives. So that's the long answer. The short answer is it's a store of wealth, it is a medium of exchange, and it is a new technology. It's all of those things.
Okay, you mentioned speed a number of times, and we'll go into this, that my knowledge of Bitcoin, cryptocurrencies, blockchain is in that, right? Not but my understanding is, from a speed perspective, Bitcoin is relatively slow. Like, you can't do the number of transactions that say MasterCard or Visa does, some of the other cryptocurrencies. But first, am I understanding this correctly? And is that's almost our technology side? Like, is that true comparatively? And then how do we think about that?
Well, I think that the Lightning Network and some of the newer ways of using it have closed that gap. So I do think it's pretty fast now. I mean, you have Strike, you have Cash App, you have PayPal. Like, I was just in a coffee shop down in Nashville where you can tap your phone just like Apple Pay and pay for your coffee with sats. So I think they have definitely closed that gap. I'd also say, even if you're doing, Bitcoin native transactions, if it takes 10 minutes or 30 minutes, contrast that with, for example, international wire transfers or even domestic wire transfers and checks.
Oh, you mean hours?
They take 2 or 3 days to clear.
Yeah.
So I mean, it's still light years ahead of some of the legacy technologies, and it's catching up to some of the fastest ones as well.
Okay, I'm gonna ask a really dumb question here. Why does a wire take like 3 days?
I have no idea. I mean, I can't come up with a good reason. I've thought about this, and I've just in the last couple of years, I have asked myself this on numerous occasions when trying to process things, particularly cross border or, like I said, even just domestic transactions. It's insane to me that you have to have your bank send, and then a clearinghouse, and then the receiving institution, all sort of settling these things. It takes forever and it's expensive.
But the part I'm missing, and maybe we're all missing this, is it's still in the end, it's a digital transaction. Like, the speed should be almost instantaneous, right? Like, I mean,
it's sending an email, right?
Right. I mean, it's not like, and again, if I'm wrong, like, please let me know. Like, it's not like when the bank goes to the clearinghouse, goes to the other bank. There's not a person checking this. You have an individual looking and being like, yes, this is, and so forth. I'm sure these are all If you look at the actual like volume of wire transfers, there's no way we have like it's some sort of computerized systems. So I mean, are there frictions that are being introduced on purpose? And then, of course, if that's true, then how how does almost Bitcoin stay away from whatever reasonings that drove that?
Well, I don't know why those frictions exist. I do know they're starting to go away. Both the Bitcoin network, like I said, has trillions of dollars of transactions, and now you're seeing stable coins. Stablecoin transactions, I think I read just recently, has surpassed, it was either Visa or MasterCard in terms of transaction volume. So there are faster, cheaper, more secure, uh, maybe not exactly peer to peer, but getting closer to peer to peer, and really cutting out those middlemen. So I think the system is modernizing because the people are demanding it, and it's happening probably a little faster than we think. Uh, well, it's one of those. I don't know. We have a baby daughter, so people keep telling me the days are long, but the years are short. I
Yes,
feel like that
yeah, I
maybe
feel
applies
that.
here too.
Yeah.
It feels like all of this should be done already, but it is happening quite quickly in terms of the
There's
grand
the other
scheme of things.
quote of like we overestimate what can be done, what happens in like a year, but vastly underestimate what happens in 10 years.
That's probably about right.
So, all right, since I've got you here, I'm gonna use a little bit more of like just Bitcoin blockchain like 101. So I've heard of you brought up stable coins. I've heard of them. My understanding is it's some sort of crypto that is pegged to the dollar or some other like fiat currency. What's the use case? Like, how are these being used?
So there are a couple different ways. If you look at some of the domestic ones, it's for that faster, cheaper, secure payments where you're not waiting for that friction filled clearing process. Overseas, now Tether is one of the most
Wait, hold on.
profitable.
I want to step back a second. Why does that? Why does the stable coin allow? You talking about like faster versus like the standard wire transfer versus like
Right.
I'm
It's
trying to understand why the stable coin allows you to do that faster.
well,
What
and
is what?
tokenized. So if it's on a blockchain, it's tokenized. It can
Yeah.
be virtually instantaneous rather than waiting for legacy clearing processes.
Okay.
Um, but to continue to answer the last question, so if you look at Tether, for example, it is essentially serving as a bank account for underbanked or unbanked people overseas. There's a lot of the world, more than we think about in the United States, that doesn't have bank accounts typically.
Mm-hmm.
And so this has basically been the financial inclusion mechanism for millions and millions of people. And that's why Tether now is like the most profitable company per employee that's maybe ever existed, because it's essentially serving as the bank account for millions of people all around the world, primarily internationally, as opposed to domestic. There's some bigger players domestically in the US, but Tether has been built this enormous user base overseas because people are comfortable trading in US dollars or these dollar peg tokens, and they can do it, from their phone, or it's very user friendly. And so they don't have to wait for a bank to say yes or no. They can just transact. And so that's why it's been particularly useful for people all around the world. So the stablecoins are introducing a lot of demand for dollars, which helps if your goal is U.S. dollar, dominance or supremacy. That's helpful. Um, it increases the demand for U.S. debt, which can hopefully, potentially down the road, lower interest rates and create more competition for it. So, but really, it's faster, cheaper, and more accessible, more democratized, basically.
If I'm hearing this, then it's essentially turning your you said your bank account into some sort of crypto blockchain, but it still feels like if you're in dollars or you're in whatever it's pegged to, versus having to do kind of the conversion and going into something else.
Right. I think that's about right. You can have
Okay.
your sort of, I'm going to sound like a dinosaur, but like your virtual wallet, as opposed to logging into whatever financial institution you typically use, you have this newer mechanism. So I don't know. It's exploding. I mean, it's everywhere all around the world now, and the competition is fierce, but it's really going full steam ahead. I think governments politics flows downhill from culture, so governments are struggling to catch up with what's already happening in the marketplace.
Governments are always struggling to catch up what's happening in the marketplace, and then they usually make rules that break it. Um, but yeah. So well, here's an interesting question. You joked at the starting with the when I asked what it was philosophical, you said it was a way of life. So much technology. Actually, I think the best technology becomes invisible. Like my phone works. I don't need to worry about like how it works. And I mean, we're in many ways we're getting back right now. We're with the AI age, and everyone's hearing about Nvidia, and so. But like, there probably is a question at some point when Nvidia may still be an amazing company, right, and still like printing money, but that we aren't like hearing about it in the zeitgeist. Or thinking about like ASML, the lithography company. Nobody like it wasn't until last what I think it was during like COVID that you actually ever heard of that company. You're like, oh wow, this is the one that nobody ever hears of. It's like I don't know, it's almost $1 trillion at this point, I think, or something ridiculous. So, do you think there's a point that Bitcoin falls into that realm where we're not talking about it as much? It just is.
I do, and I think we're getting there. Yeah, I was looking at a website that was listing the top 10 most valuable assets. So it would have the market cap of Google, Meta, Amazon, um, gold, things like that. And Bitcoin, I think this week surpassed Google. It's a $2 trillion market cap. It's just amazing. I live and breathe it every day, so it's not really surprising to me, but to a lot of people I know who don't live and breathe it every day, they have no idea. That would shock them. And that there are trillions of dollars of transactions on it, and that a single Bitcoin 10 years ago was worth pennies, and now it's over $100,000 per coin. I think as more and more institutional adopters get into it, you're seeing people invest in the ETFs. The prophecy that Satoshi made so many years ago is coming true. You might just want to acquire some Bitcoin just in case it catches on. And it's caught on. And I think now people are opening their eyes because they're seeing the value, increase so much that it is the awareness is growing. And I think probably in the next, handful of years, I think we'll probably get to that place where it's just this accepted entity, asset, network, and it's less of a mystery. I think people are now incentivized to learn.
Do you see this tension, or at least I feel it? Maybe I'm on X too much, but that there's kind of a tension between like Bitcoin and all the other cryptocurrencies, and it's like you have the also like the Bitcoin maximalists versus like how do you see that tension, and is it real? Like, is there real tension, or is it just certain people who are loud, or is it is it good? Is it like more the market playing out? Like, how are you seeing that tension?
I mean, Bitcoin is unique in that it's a commodity without an issuer and with a capped supply, and it's truly decentralized around the world. And so Bitcoiners will tell you, Bitcoin and crypto are not synonyms.
Right.
Bitcoin is unique, and I tend to agree with that. There are others in the space that see different networks, different ways of utilizing uh, blockchain technology. There's different applications you can build, smart contracts, etc. Um, I think where the conflict arises is where tokens that do have an issuer that can be printed and the value can be changed or diluted. Um, it can be affected by the actions of the founder of that token. Um, to the extent that they're trying to be competitors to Bitcoin, they think they can take down Bitcoin and the Bitcoiners are saying, well, actually, no, you can't because yours doesn't have the unique attributes of Bitcoin. That's where the conflict arises. Um, it's I think about those details, and some of the conflict is gets pretty heated, as you might imagine. There have been some that have been, launched protests against Bitcoin companies trying to smear the asset and the ecosystem, um, in what they think is this like competition that doesn't really exist. It's kind of, I guess in my mind, this is going to sound cocky, but like I grew up in the New York area, so the idea that there was a Mets Yankees rivalry was never a real thing. It only went in one direction, and I think that's kind of the way I see it for those in the
I've
space
been
that
a
are trying to compete with Bitcoin. There are others who are just creating new useful applications in the general blockchain ecosystem, and I think that's not the dynamic. But it's the ones who think that they are the new Satoshi and they're going to take down Bitcoin. That's where that kind of rivalry uh, gets to be kind of entertaining sometimes.
yeah, I'm a Lakers fan. A little torn right now with the whole. I've never been a big LeBron fan, so it's always been a weird time right now. But yes, the idea of a Lakers Clippers rivalry was always like, um, what? But it was
Yeah.
always the funny part was I don't know how it is in New York, at least for like you could be a Clippers fan on top of a league, which you're like, yeah, it's like the little brother. Like, good job, you guys are doing well. And obviously now they've become under Ballmer and everything, a much like a real team and a contender. So it's a very different environment. Um, well then, okay, I'm gonna again. This might be a dumb question. You you said that there aren't anyone's who have the kind of unique characteristics of Bitcoin, given the white papers and everything. Like, why not? Why hasn't anyone then just said made Bitcoin two?
I suppose some have tried. It's sort of unique if you think about Satoshi created this, gave it to the world, and disappeared. And it's almost, I mean, it's changed. There have been developers who have kind of improved it, the security and whatnot, but it's essentially this unchangeable force. Um, most people are in business to enrich themselves. I'm not saying that in a bad way. I'm just saying that that's the way the world works. And so um, I don't think there's a lot of people out there who would create a truly decentralized network without a CEO of Bitcoin, um, and then be willing to give it to the world and just walk away. I think that's pretty unique. I think everybody else wants to be have their company be the brand name. Everybody wants in the tissue business wants to be Kleenex. Um, but so that's why I think Bitcoin is a unique player.
But it's funny that you use that analogy because you compared the market cap of Bitcoin, which is an asset, to Google. So it still had a company, even in your case, you had a company like mindset. Like I don't think it's an apples to apple. Like I get Bitcoin to, gold or Bitcoin to maybe like markets, but comparing its market cap to a company, it's almost it's funny. It's not it's a kind of an apples to oranges comparison, but then in that kind of mode that you just said, it fits more into like it more is like a company in some ways. At least
Well, I
narrative.
guess if you're
I think
considering
narratively,
if you're thinking about your stack of Sats as shares in the Bitcoin network, I don't think it's a perfect analogy, but it's one that is understood by people maybe who aren't immersed in what Bitcoin is. So, um, yeah, if you add up the value of all the Bitcoin, it is about, it surpassed the value of all the shares of Google. So I think it's an okay, imperfect analogy, but not bad for explaining it to people.
right? No, and it works. As I said, it works narratively. Like when you want to be able to point, it's something to point because if you're going to compare it to, I would assume dollars or other currency types. Of course, the numbers are probably not even close to the same.
Well, the US dollar, and I I want the U.S. to be dominant, to have the reserve currency, but the U.S. dollar's lost a third of its value in the last decade, and Bitcoin has gone up 37,000%. So it's it's not really a fair fight, I think, these days.
I want to pivot a little bit to Riot and the idea of Bitcoin mining and how does so tell me a little bit about like what Riot is, what's Bitcoin mining, how kind of all that works from both a technology perspective and a business model perspective.
Sure. So I think it it's probably most easily described as maximizing the value of an energy portfolio. So Riot has about 2 gigawatts worth of power, and it's about maximizing the value of that power. Um, a lot of it is previously stranded or underused. We have a facility in Rockdale that used to be an aluminum smelting plant for the space program, and that went out of business. And so you had a town of 5,000 people, and hundreds of jobs went away. And so you had this huge power infrastructure that was available for that business. So we were able to come in, invest, uh, sort of repurpose and make it functional, hire hundreds of people to operate this facility, and we'll use the power when it is inexpensive and abundant. So most people use a lot of power in the morning, and then when they get home from school or work and it's hot or cold out, then you see demand go up. I'm very high level generalizing here. We'll use it when it's, pennies, because it's otherwise not going to be used. We're turning that underused electricity into Bitcoin, into a valuable commodity. What that looks like is, think of, airplane hangars or warehouses, basically metal building, long metal buildings, like football fields long. And then you have, depending on the type of facility, it's either air cooled or immersion cooled. If it's air cooled, you have stacked, just racks. Think of just metal racks with ASICs, application specific integrated circuits. They're little computers. Um, they've been described to me as a toaster. They look like a toaster. I don't think they look that much like a toaster, but think, shoebox sized computers, just stacks, tens of thousands of them through these very long buildings. And what they're doing is hashing. So they're generating lines, and looking for a nonce, which is the correct combination to unlock the next block in the blockchain, which is data. So that's date stamps, time stamps, wallet addresses, showing this person owns this unique Bitcoin at this time. And so when you unlock the next block in the chain, the next set of data, you get a block reward. And so that's why it is profitable. You're using cheap power to generate a digital commodity that is worth a lot more than that electricity. That's the simplest way of describing the business. We have another facility in Corsicana doing the same thing, but we're now looking at diversifying the revenue streams. So that facility has a gigawatt worth of power capacity. 400 megawatts right now are doing what I just described, mining Bitcoin. The other 600 we announced to the market. So it's, I'm not giving you any privileged information here, that we're looking at potentially AI, HPC partnerships to create a different kind of revenue stream with that power capacity. But essentially, the long and short of the business model is you accumulate all this power, and then it's a matter of monetizing it most efficiently for the market, and hopefully, creating valuable things, securing the global Bitcoin network, and then hopefully providing very valuable processing for industries of the future.
I want to just go down like the kind of the AI and the energy thread right now is because of just the increasing demand. I always love that we finally nuclear power is coming back because of the AI demand, and you can have more of a symbol of that than turning on 3 Mile Island. Um, so I'm assuming the power you guys don't have a power plant. It's you're not creating, you're not owning that level of the stack as much as that you're connecting into a 3 Mile Island or whatever, like whatever the power source is, and then um, distributing it across. how do you see, like, with the data centers? I mean, do you see the just the hunger that is going at the, you know, something like right, almost like if I look in 10 years, you would do like way more AI than you would be like, Bitcoin money. Especially what happens to something like Riot when you hit the whatever the cap, right? I don't know what the right word is, but like when all the Bitcoins have been given out,
So,
like what happens then?
so that's not going to happen for over 100 years.
Oh, okay,
But most of the Bitcoin have been mined. What happens is every 4 years there's a halving, so the block rewards are cut in half. The number of Bitcoins you receive are cut in half. Now that's been made up for over time because the value of each Bitcoin has gone up.
sure.
And then I think part of the idea was transaction volume would go up as well, and Bitcoin miners can get transaction fees for helping to validate those transactions. So anyway, there's multiple revenue streams for Bitcoin miners, but um, I think that the AI we're seeing a squeeze right now. There's not enough power capacity. Obviously, that's why we need nuclear to come back. I think we're very late. China's ahead of us on power capacity. They have functional nuke facilities. They're building coal plants, like 100 coal plants a year or something like that. I mean, they're just all of the above power, power, power. Because I think this is sort of a new Cold War of, and think about it, AI is how everyone's going to consume information all around the
Right.
world. So if it matters a lot whose values are reflected in that information and how it's delivered.
There's
Um,
also no different. There's no such thing as an energy poor, prosperous country. I'm sure you've seen that same graph. And so this, yeah, this idea that we stopped, creating energy and consuming, like I'm all for efficiency, and this isn't me saying like, but our shift to efficiency kind of forgot well, what happens if you double, triple the amount of energy we use and be able to, um, mine. What could you do with it? And like that's when you're only on the efficiency route on energy, you don't ask those questions of like, well, if you triple the amount of energy available, what could we do easier?
I mean, we're going to have to basically triple the amount of energy that's available. And so going back to your question about and connecting it, your question about the type of energy we use, our facilities are grid connected. Others are, but we don't add transmission costs basically because we'll go to like the substation or basically the source of the power, because Bitcoin mines can exist anywhere because the network is decentralized. We can turn on and off, and the network still exists. A, AI or HPC, that's more of a firm load. You need that connected and powered up all the time, which is why we need more dispatchable load. So if it's nuclear, if it's natural gas, whatever it may be, it's functional all the time. Um, Bitcoin miners in particular can use any source, intermittent. They can use wind or solar or whatever. They can just use power when it's available, and they can turn off when it's not. That's not most businesses. So as a nation, we need more dispatchable load that's available all the time. And, we're just going to have to catch up. We need more nuclear. We need to use more of our nat gas. Um, Riot invested in a project called Reformed Energy. They're doing municipal solid waste to power, where they take literally the sludge out of garbage dumps, put it through the superheater process, and then it can be either sustainable aviation fuel, or we can use it to power turbines there at the dump and mine Bitcoin with it, whatever it may be. But we're trying to be a part of the energy revolution that America needs. We just need more power that's available that may have gone off topic from what you asked me about. That was
No,
my
of course. That's
rabbit hole.
I said
Sorry.
I love rabbit holes, right? And the idea of us being in a new Cold War is actually something that's come up in the podcast a number of times, and how we think about energy and reindustrialization and all of the atoms that we need to be building, and what are the technologies that help us do that, right? Whether it be new forms of electricity, or new the way to use digital technology to kind of expand that. I do want to go specifically now into kind of your role at Riot, and clearly one of the big things uh, has been, at least over obviously the last few months in coming the election, about policy. So first, what is like the current policy landscape, and how much of it? I almost want to start off with that there's things that work because it's just like we can treat Bitcoin like a traditional asset, and other times, getting back to your very first question, where it's not one thing, it's like these six different things. So I think from a policy perspective, um, that can both be a headache for people in the space, a headache for regulators, and usually ends up being of, well, we're just going to draw the big square box out here and everything in, and it's that ends up never being the right tool set it's made.
Yeah. So there's a bunch. Okay. So there's a few different elements I'll touch on. So a lot of different ways I can go on
It's
that
just
one.
a tiny little question, right? Yeah.
Yeah. So, well, we were just talking about energy, so I'll start there. So, um, we've done a lot of work educating policymakers on the flexible load profile of Bitcoin mining that I just described. So, because this network is decentralized all around the world, and if any one Bitcoin mining facility is turning off for whatever reason, the network exists everywhere. So that's fine. And that's different from other businesses. And it means that you can be monetizing power, making new power plants or new power projects. Uh, you make the economics make sense because you can go to the source, you can use that power, monetize it immediately. And then if the grid needs more power, that Bitcoin mining facility can turn off, make more power available. So it's a great bootstrapping mechanism for helping to meet our power demands of the future. Not everybody thought of it that way for a while, and still some people probably don't. They just think, oh, that's a demand for power. We don't have enough power. Get rid of that demand.
Right.
But there's a big difference between scarce power and abundant power. And Bitcoin miners use it when it's abundant. They don't generally use it when it's scarce. And they can be effectively a dimmer switch for a grid operator. So it's actually quite useful. And that's been a big education effort on the energy front. We actually had to sue the federal government during the Biden administration because they had taken that latter tack that they didn't want this demand for power in America. And they viewed it as an environmental problem because if you're using electricity, there must be fossil fuels generating that electricity, bad for the earth. Of course, that if you accept that at face value, which I do not, then your toaster, your refrigerator, your cell phone, everything's boiling the ocean, right?
Mm.
It was because they don't like Bitcoin because it's a decentralized network that they don't control. That's the more cynical view. That's a very, very brief nutshell of energy and Bitcoin. The other pieces, so the SEC, CFTC, and federal courts have all generally agreed that Bitcoin is a commodity, that when you get mining block rewards, that is very much akin to gold or oil pulling something out of the ground. You expend a bunch of resources. You have to have a big investment. It takes time. You don't know exactly when or if you're going to find it. There's a lot of commonalities to the logic. It meets the definition of a commodity under federal law. The IRS doesn't agree with that. So they actually think that if you get a block reward, that's like someone wrote you a check for a consulting fee, which the very serious consequence of that is that if you're taxed as income at the moment you mine a Bitcoin, over long term value of Bitcoin goes up. Short term, it's pretty volatile. So if in the short term that value goes down, you're still taxed on the value at the time that you mined it. You might have to sell a bunch of your Bitcoin just to pay the tax on the Bitcoin that you have effectively created. So that the tax policy makes no sense. So that's something that we really want to get harmonized with every other part of the federal government that views Bitcoin as a commodity. It is not yet now medium of exchange. Let's touch on that piece for a second. So, like I said, trillions of dollars of transactions on the Bitcoin network. You can now use using Lightning Network technology. You can use it with Strike or PayPal or whatever, Cash App. It's still treated like a capital gains taxable event if I go out and buy a loaf of bread with Bitcoin, or my local coffee shop wants to accept
What?
Bitcoin, because again, the IRS hasn't caught up. So if you use a foreign currency like a euro, or I don't know, pick your foreign currency, there's a de minimis exemption if the value of that currency versus the dollar changes in a meaningful way. if it's still a small enough transaction, the IRS is not going to dig into that and figure out if you owe capital gains on it, because it would be an administrative nightmare. Any potential tax revenue would be so small it's not worth the effort, and it would be a huge headache for individuals. So, but the IRS has not yet applied that de minimis exemption to Bitcoin transactions. So even if you buy something that is $5, you then theoretically have to file a tax form and pay capital gains. So it's ridiculous. It's completely silly.
I think ridiculous is an under exam or underused in terms of how bad. Like, yeah, I can't.
Oh,
Paying
it's so
cap
dumb.
gains to buy a loaf of bread is an interesting model there.
Yeah. So, okay. So medium of exchange, the energy piece, the commodity piece. Um, and then I would say, where does it fit into the broader financial system? And we could get into like the strategic reserve idea and things like that. But um, I
What I
have,
mean, so what I mean now is why don't we now? So I keep hearing that. I'm trying to understand. I'm trying to understand it. Be somewhat open minded. There's certain cynicisms I see of this. Of like, well, yes, we have a commodity. Please buy a lot of it. Like, okay, like there's a little bit of cynicism there, right? Um, so help me understand exactly like what it is. Also, I think it's happening. There's conversations at like the federal government level. There's also conversations at like the state level. Like, okay, so first, what is it, and then what's going on?
so governments have strategic reserves of lots of things. The
Sure.
US government has the gold depository at Fort Knox. Um, Canada famously has a strategic maple syrup reserve. I think the U.S. government still has a
That's not a
cheese reserve.
joke. I thought it was always as a joke. The strategic maple reserve. It's real.
I don't. I think it's real, actually. The U.S. government. I think we might still have a cheese reserve. I mean, the U.S. government owns like 2/3 of the Western United States in terms of land. There's a lot of assets that governments hold strategic. We have our strategic oil reserve.
Right.
In this instance, I think a strategic Bitcoin reserve makes sense for several reasons. One, with the debt and deficit in the shape that they're in, I think the United States hedging to have a supply capped commodity on its balance sheet, accumulating an appreciating asset rather than debt, I think would help strengthen the long term financial health of the country. It is finite, and our adversaries are starting to accumulate it. We believe, based on public reports, that China has about 200,000 Bitcoin. I saw a report that Russia had mined about 50,000 Bitcoin last year. So countries that maybe we're frenemies or adversaries with are accumulating this scarce asset. We think perhaps in part to weaken the strength of the US dollar and our ability to influence the world. So the US should lead. I mean, if it's going to be acquired by institutions and governments, the US should lead. It should lead. If we want to maintain our superpower status, I think we should try to be the
I'm gonna push
Bitcoin
back.
superpower.
I'm gonna push back for a second. So we're gonna put Fort Knox in the gold reserve over here for a second because I think that's obviously had to do somewhat with the being pegged to gold for a while. So let's put that one aside. As far as I'm aware, like the different commodity reserves we're talking about, and obviously the oil reserve is the one that is talked about the most. Is it's not for the fact that it is a capped commodity, but it is literally for the fact of in times of crisis, it doesn't get used this way, but at least the theory behind it, in times of crisis, we have this reserve of this commodity. And I can get the point of you're saying that she's like, energy, food, like those kinds of things that we're able to tap into that reserve and use versus this as as a financial asset. Couldn't you say the same thing then of, well, why don't we do a strategic stock market reserve? Because over time it's volatile, but as is Bitcoin, but over time it generally goes up. So you could almost make the same argument.
But there's no cap on the number of shares of any given company. The board or their shareholders could vote and authorize new shares. They could dilute it. Bitcoin, you can't. That's why it's unique. There's no issuer. and there will never be more than 21 million. So if the US government doesn't want our adversaries to capture the value that they then never have to relinquish, if they do, the U.S. government should front run. They should lead this charge and acquire some of it to make sure that they're capturing that value. If, like we believe will happen, the supply will stay the same and the demand is virtually unlimited, then I think it would be a missed opportunity for the United States. A friend of mine had a very pithy quote that I thought was apt. Bitcoin doesn't need the United States. The United States needs Bitcoin because our dollar has not been treated well by policymakers, and Bitcoin is a hedge against that could help strengthen the financial health of the country. And now you got into the stock issue. Look, I actually don't think it's a bad idea to have a sovereign wealth fund. Some of the wealthiest countries in the world and some of the fastest advancing countries in the world have them. Maybe it's not the worst idea to have the people's government sharing the prosperity in some of the fastest and best growing companies in the world. I haven't thought too deeply about it. I don't think it's a bad idea, just off the top of my head.
It's my issue has tended to be with the idea of obviously sovereign wealth fund has come up a lot recently. Is one, I don't understand how you can have a sovereign wealth fund and be 35 or 36, whatever the debt bomb at this point is. Like that, where's the money going to come from? That we're going to be doing this, we're going to be issuing like debt to create the sovereign wealth fund, and I think generally, just historically, and yes, obviously, Norway and Saudi Arabia, there's a lot of sovereign wealth funds that exist in this, but it just, the idea of government picking winners, forget even philosophically, just historically, they're just bad. So, so the idea of this, like, okay, we're going to be doing this, and I know, like, there's the Texas equivalent of a sovereign wealth fund, and a lot of people I know and friends are behind it, and I get the idea, and I see the alignment that you're saying with the strategic Bitcoin reserve and the sovereign wealth fund. Is like, okay, can the federal government be front running, be part of this kind of prosperity? But I don't know. It just, sometimes some of these, it all sounds great on paper, like in all these things, and with a path to hell is paved with good intentions.
So, very fair issues. And I know one person who is also raising a similar concern, even with his enthusiasm for a sovereign wealth fund, has expressed some trepidation because of all the debt that we have. So, in effect, having the U.S. government do leveraged investing, that's not without.
It gives me a heart attack. That just even phrasing it that way, right, is just like, oh God, like.
And so President Trump actually said something similar just in the last week. So you're not alone. But I also had heard a very compelling case recently about the Social Security Trust Fund, which is not a thing. It's all, I mean, we're on the hook, right? And it's just been in T-bills. And so the growth of off-takers has exceeded the growth of payers, and the length of the time that people are off taking has grown. The value of the dollar has gone down. If we had invested the Social Security Trust Fund, if you believe there's a lockbox or what have you, if we just put it in the S&P 500 in the 70s, it would be thriving. It would be flush, and we would have nothing to worry about. So that's, I think, a persuasive case on the other side. But I share your concern that, like, having the U.S. government to leverage investing is scary because we've been so financially irresponsible over the last several decades as it is. So I don't have a silver bullet. My name's not on a ballot, so I don't have to make the decision.
What do you think about, like, then the getting into, like, just generalized policy, right? Kind of away from the reserves for a minute. So, like, there was an article that I think came out, like, today, and I've seen a bunch of others where they talk about, from just an AI perspective, where, okay, it's probably better to have it at. I'm quoting the piece, not my necessary opinions. I'm not sure I fit, which is, we need some kind of overarching federal regulatory framework versus a kind of a state by state, because we're going to be having, it's just too difficult to have that kind of you know, confusion almost. But at the same time, I always would say like, okay, but there's a reason we have the kind of the ideas of laboratories of democracy as with the states. So kind of where are there certain things that, from like a Bitcoin perspective, you think should be, we just need one rule, and others that they should be, let's play at the states and just kind of see what happens, or you kind of one versus the other?
I think the network's been maturing pretty well through the laboratory mechanisms, through that kind of theory of the case. Um, I'm going to super generalize. I think most of the time things work better when you let the laboratories work and the best ideas bubble up, and there's, iron sharpens iron. You have states competing for the best policy. And then when those sorts of frictions are worked out, having a federal policy come in to sort of memorialize the best ideas that have come out of the laboratories. I think generally speaking, that's a better approach. Washington moves too slowly and can be too knee jerk and can be too ideological to just come in the early stages of a technology and try to issue a bunch of rules that are obsolete as soon as they're instituted. So I think you saw the industry reaction. You mentioned AI. That the investors in AI were not happy with what the Biden administration did with their executive order that was hundreds of pages long. Um, at this very early stage, as the industry is developing, they thought that was basically hamstringing the development of this technology. And I think, but they're also, some of those players are pushing back on some of the state level legislation because they think some of the states are being a little bit too involved at this early stage as well. Um, we can't have a Wild West forever. There's going to have to be some rules, but I think allowing the market to mature in these more localized ecosystems is probably a good way to go. Of course, that's complicated because access to the information generated by AI businesses is global. So it's hard to your square peg round hole analogy a little bit. It's a little bit that way. But if one state starts to be overly restrictive, then that becomes sort of the benchmark. And then that's just a choke point that then, if any business wants to operate in that state, you either have to geofence off the state or you have to essentially make your entire business compliant just because of one state's rules. So it's a difficult balancing act.
So how much of a connective tissue is there between the kind of the innovation hubs for Bitcoin and the state level sandbox versus restrictive? I mean, is it, are the hubs, is it the Bay because of tech? Is it, New York because that's, the finance capital? I know there's lots going on here in Austin. Like where are the hubs, and then how does that tie into the state level regulations?
I have read articles that list other cities like Seattle and LA and some other ones. Um, in my experience, I've seen like a pretty strong group of Bitcoiners in Texas, in the Austin area in particular. Nashville has a really thriving Bitcoin community. There's great guys who operate a place called Bitcoin Park down there. It's almost like a WeWork for Bitcoiners. And there's some investment funds that operate out of there. They have incredible events with very high level government officials, famous investors. I mean, people who are really into the Bitcoin ecosystem oftentimes flock there. We're having the annual Bitcoin conference, which is like tens of thousands of people in Las Vegas this year. Previously, it was in Miami. Miami, I think, is also another thriving kind of Bitcoin and tech ecosystem. Of course, Mayor Suarez agreed to get paid in Bitcoin, I believe, and I think they launched their own coin there. So, just in my experience, I have found that Texas, particularly Austin, Nashville, Miami, those are all pretty big, thriving Bitcoin hubs.
And where do they fit compared to like, I mean, is it happening in like New York and the Bay as much? I mean, obviously Coinbase came out of the Bay, and
Yeah, I mean that's obviously a big part of the ecosystem. Like the exchanges are a bit of a different beast. They're kind of trying to modernize the financial institution side
Uh-huh.
of things. Whereas, and in New York, you have Bitcoin miners, you have other, uh, a lot of younger tech companies, um, some other protocols like blockchain networks being created there. New York is pretty restrictive, though. I mean, they
No,
attempted to put a
never.
moratorium on Bitcoin mining and basically kick it all out of the state, even though there's a big Bitcoin mine that operates almost entirely on hydro, like water, totally clean energy, and they still were talking about banning it. So New York is tricky. They offer up regulations to say if you want regulation to get your legitimacy, so to speak, we'll give it to you, but be careful what you wish for. So some of these other kind of less regulated areas are a little bit easier. But yeah, I think look, Coinbase is obviously a huge player out of the Bay Area, but they're, like I said, more on the kind of financial institution adaptation side of the business rather than uh, the energy piece, monetizing the energy, figuring out where the facilities are going to be to secure the network, or in some of these other kind of startup-y areas. I've actually seen them a little bit away from the Bay. I'm sure they're still in the Bay Area, but they're in some of these other cities as well.
So back almost to our kind of Bitcoin versus crypto, do you see there's a difference between those hubs, like something like Austin and Nashville that you mentioned? Are they generalized crypto blockchain hubs, or is it more on the Bitcoin side, or is this a distinction without merit?
I think Nashville, just my experience. So you know, take it with a grain of salt. But my experience, like Nashville, is very Bitcoin focused. I found Texas to be very Bitcoin focused. I think New York is broader, more people developing new protocols, way to tokenize different assets, things like that. Um, so New York less a little. I mean, there's still a Bitcoin community there, but it's more. It's definitely broader in the New York area. But I would say, and Miami, I think, is Bitcoin heavy, but still diverse in the ecosystem.
So if you're saying that, like from like the Bay, New York, or New York's more like the fintech side and San Francisco the tech side, but you said that there's a lot of here in Austin and in Texas, very Bitcoin. What are they doing then? Is it are they building things off of it? Is it more about the mining side? Is it more the community and exchange? Is it people creating DAOs? Like what's going on here?
Well, in so I'm on the board of the Texas Blockchain Council, and I would say we are
The last time I
very
did a
Bitcoin.
Bitcoin episode was with Lee.
Oh, okay, great.
Yeah, but this was like
So
3 years ago, so that's why I was like, oh yeah, it's probably time to touch upon this again.
yeah, so we're heavily in Bitcoin mining, and I think look, Texas is an energy capital. Bitcoin mining requires energy. It makes a lot of sense. So that's where a lot of these businesses are. So it's less on the exchange side or smart contract side. There's still other innovative companies in Texas, but it's very heavily in the Bitcoin mining sector because it's an energy hub, and you know it's the biggest input. So I would say Texas in particular is pretty heavy on the mining side.
Lean into your
Um,
first principles as an energy hub, and that's what makes the most sense. It's a reoccurring theme on the pod and my writings is that when you line up companies, ideas, founders, capitals with the first principles of ecosystems, that's when something interesting happens. Versus if you say like, well, we're Silicon Hills, or we're Silicon Beach, or we're Silicon, well, that's not you. That's you trying to be somebody else.
Yeah. Oh, I completely agree. I just find it such a pure and interesting business environment that we're in now. The convergence of energy, AI, Bitcoin. We need more power. What's the most efficient and valuable use of that power to move humanity forward, to democratize information and money? I mean, it's like these such fundamental critical questions. And I think Texas, and you just saw the president's trip to the Middle East talking about trying to work with other energy hubs to do deals for AI data centers and things like that. it really is like energy is the base of everything. And then what are you going to use that for to make life better and more efficient for everybody? It's like these just super basic fundamental questions. And that's why I like working at Riot. It's such an interesting company just doing just that. Like, all right, let's get more energy resources and let's figure out the best, most efficient way to use them for the world. It's such a cool company.
Yeah,
Cool idea.
use that energy to expand the frontier. I think that's the shortest answer of what we should be doing with it, whether that be the frontier of space, health, anything. I think that's the push. Brian, this has been a lot of fun. I always like to end on the same question. I think we were kind of getting at this. So, what's next, Austin?
It's Bitcoin miners, AI, energy, all getting married in Texas to make the U.S. the leader of the world for the next several decades. That's what I think is next.
Love it. Brian, thanks so much for joining the show.
Appreciate the invitation.
So what's next, Austin? We're glad you've joined us on this journey. Please subscribe at your favorite podcast catcher, leave us a review, and let your colleagues know about us. This will help us grow the podcast and continue bringing you unique interviews and insights. Thanks again for listening, and see you soon.